Hello, welcome. Thank you for joining us. This is the third part of Saxe, Doernberger, and Vita's series on hurricane coverage. I'm very happy to have with me here today Dave Jordan and Kerianne Kane. They're from our Northeast office, and they're here to talk about today's topic, which is examining storm damage risks and insurance issues impacting power and energy providers. Dave and Kerianne are members of our Power and Energy Practice Group here at SDV and are well versed in this area of insurance coverage and have lots of valuable insight to share on this topic. Before we go any further, let me introduce myself and have Dave and Kerianne introduce themselves. Actually, Dave, why don't we start with you? Go ahead.
Thanks, Kelly. I'm Dave Jordan. I'm a partner at SDV. I've been with the firm since 2004 and happy to be here today to talk about coverage related to power and energy.
Thank you. Kerianne, go ahead and introduce yourself.
Good morning. I'm Kerianne Kane. I'm an associate at Saxe, Doernberger, and Vita. I've been here for just about 2 years and happy to be here today.
Thank you. My name is Kelly Johnson. I work in the Southeast office. I'm a commercial litigator. I've been practicing about 13 years, and my focus has been entirely on policyholder coverage work since I joined the SDV firm. I'm also the senior associate for the Natural Disaster Recovery Group, which now more than ever is a significant part of our nationwide policyholder coverage practice. Now, without further ado, let's go ahead and get started on today's presentation, examining storm damage risks and insurance issues impacting power and energy providers. So Dave and Kerianne, can you tell me, what have you guys been seeing as the key risks associated with hurricanes in the power and energy industry?
Well, I think the pivotal risk is the energy production disruptions. Oil and gas production is at an all-time high, with the exception of a little bit of a drop-off because of the recent, COVID-19 crisis and lower demands for oil and gas. But, on average, it's been going up and up year over year. The same is true for energy, for electric energy generation. We consume more electric energy now more than ever, especially, as we become more and more reliant on, electronic devices, iPhones, computers, laptops, iPads, you name it. So the production has gone way up. And obviously with increased energy production and consumption, the disruptions are that more magnified. And so when everybody's without power or they can't get access to oil and gas, it's a major issue. We become very reliant on these resources. So I would say that is the key issue related to storms, because if you knock out these facilities or the supply, it's a huge disruption.
Right, and then
I'm sorry, Kerianne, go ahead.
Another thing, with increased energy, there's also been an increase in frequency and severity of a lot of major storms and hurricanes, especially over the last 30 years with global warming. We've seen a lot more of these storms, disrupting power systems, fuel shortages, service disruptions, which we'll continue to see that in the future, as we see more of these types of storms.
And so, with that, with greater disruption, more frequency of storms, obviously, insurance claims are increasing as well. And, the greater the payouts that these carriers are making, or the increase in the number of claims, there's more disputes over coverage and, more litigation concerning, what's covered, what's excluded. And that in turn leads to higher insurance premiums, or maybe a reduction in the product that's offered. Added exclusions, more sublimits, greater deductibles, and things of that nature.
So what sectors of the power and energy industry are you finding are most heavily impacted by hurricanes and tropical storms?
Well, a large part of the energy infrastructure is located in coastal areas of the United States, especially the Gulf of Mexico. There's a significant portion of the oil and gas sectors that operate out of there. And, being in that location, those companies are more susceptible to, damages from hurricanes, given the low sea level. We have oil and drilling platforms off the coast, which puts them oftentimes directly in the path of major hurricanes and storms that lead to extensive damage. For example, in 2005 with Hurricane Katrina, And Rita, there was damage to over 100 platforms, over 500 pipelines, and the magnitude was significant. I mean, it affected the markets as far away as New England and New York.
Yeah, and I would say that you know, the Northeast area or other areas that are heavily wooded are also susceptible to greater impact from these storms, because you know, trees come down and they knock down power lines, because a lot of the infrastructure is above ground and not below ground. So those areas that have, you know, lots of trees are susceptible more so than I think other areas that are more open and you know, plains and things of, you know, plains and geographic areas of that nature. You know, this last tropical storm that came through the Northeast, Isaias, and I apologize if I didn't say that correctly. You know, that was a huge disruption to the energy providers and to the, you know, citizens of those areas, people without power for days. And so, for example, you know, not necessarily in the Northeast, but just to give you an illustration of how large these storms can impact wooded areas. You know, in Katrina and Rita, you had a roughly 17,000 utility poles that were destroyed, about 35,000 spans of wire, about 3,500 transformers, and about 260 some odd substations that were impacted.
Yes, and as somebody who lives in Florida, I can assure you those are very real concerns. When you don't have your power and AC after a storm down here, it's brutal. Now, in addition to the physical damage that you just described, hurricanes also inhibit power and energy companies' ability to produce income from energy generation. Now, what coverage is available to P&E companies to help protect against those kinds of risks?
So in terms of first-party losses, most commercial property policies include business interruption coverage, which would help insure against those types of losses associated with disruption. So for instance, lost income, extra expenses that might result from a disaster, as well as lost operating revenues, you know, that might be related to a shutdown as a result of a hurricane, financial losses associated with post-storm reductions in energy production. But the thing to keep in mind is that in order for coverage to apply, most courts have held that there needs to be physical damage to insured property, as well as a complete cessation of business. But this is, you know, dependent policy to policy given the different language. So it's a good thing to keep in mind and take a look at.
Yeah, just to add to that, first-party property policies, you know, are very unique between carriers, unlike a standard CGL form, which is, you know, pretty routine across providers. The property insurance products can vary dramatically based upon who's issuing the coverage. So, you know, it's true to say that generally almost all policies require direct physical loss, and some require a complete cessation of business, and others do not. But it's critical that if you're faced with these types of losses, that you review the language very carefully, because it can vary dramatically. Additionally, because the economic losses that are suffered by these providers can oftentimes, you know, far exceed what the physical damage is and the cost to repair the infrastructure and such, the markets have responded to that. You know, having blanket business interruption coverage may be hard to come by now. There may be limitations in terms of you know, the specific types of economic losses that are covered, whether it's, you know, carrying costs such as, you know, your overhead, or, you know, some sort of formulation of profit, or other types of soft costs that you have incurred as a result of the shutdown. But it could be very itemized or particular under the certain policy. In addition, you know, limitations on these business interruption coverages may be applicable as well, such as waiting period deductibles. A lot of these programs have requirements that before the coverage kicks in, your loss has to sustain beyond a certain number of days. It could be, you know, a 2-week waiting period deductible. It could be larger than that or smaller than that, again, depending on the policy language, but that could, you know, greatly impact your coverage. And additionally, you have to pay attention to the period of interruption language too. Some of it confine it to a finite period of time, whether it's a year. Others say, you know, that amount of time for which it which it takes you to reasonably get back up to speed. And if you're confined for a period of interruption, that as soon as you start operating again, you may not capture your full business interruption losses because, as most people know, once you get back to working from a loss, you're not, running on all cylinders. There's a ramp up often to get things back to normal. And depending on the language of the policy, you may not capture the losses while you're in operation, but you're still in that ramp up mode.
Now, what about highly interdependent P&E companies that, don't suffer any losses themselves or any direct physical losses themselves, but because there's another business or industry they rely upon, they are damaged or, experience loss from a hurricane? Are there any other types of coverages available to protect those companies in the absence of the direct physical loss?
Yeah, that's a really good question, Kelly. I mean, for example, I know a number of years ago, there was a power plant disaster in Japan, and a lot of the auto companies in the U.S. obviously they didn't suffer any direct damage to their property as a result of that, but they relied heavily on part suppliers that were located nearby that plant disaster, and those companies couldn't supply the products that the auto companies needed, and obviously that resulted in economic losses. I mean, the same is true for the power and energy industry. If you're a distributor and you're relying on supply and you yourself don't suffer any physical loss, but the suppliers did, I mean, obviously your hands are tied. So there is a product, that you can sometimes get called contingent business interruption that, the wording of the policy is such that if one of your suppliers or somebody you rely on heavily to make your company work suffers a loss, you can make a claim under those types of policies to replace your profits.
Now, I understand, and obviously everybody knows that millions of homeowners and businesses rely on the electricity provided by these P&E companies. Power outages caused from hurricanes can be costly for these customers. Among other things, outages cause, lost income, food spoilages, things of that nature. Are P&E companies liable for those results? And is there any insurance that could possibly cover them against that risk?
So in some instances, public utility companies are allowed to limit their liability for damages as a result of service disruptions. A lot of times they might use some sort of disclaimer saying that they're not guaranteeing uninterrupted supply of electric service. They're not responsible for any loss or damage resulting from the loss of service or any consequential damages, lost profits. But their ability to do that kind of depends, on the state and the specific regulations they might have in place.
Yeah, and the opposite may be true as well, Kelly. Some states may require energy companies to compensate customers who have been without power for sustained periods of times. Again, referring back to the Isaias example in the Northeast, a lot of people were without power, not just for a day or two, but sometimes a week or more. And in New York, Con Ed stepped up and they provided reimbursements or some sort of compensation to their customers who lost the food in the refrigerator or had other economic impacts. Maybe they lost medicine or things of that nature. In Connecticut, the main power supplier there, Eversource, did not do that, and so the legislature was very unhappy to begin with in terms of how long it took Eversource to restore Connecticut customers in their areas up to full power. And they were also unhappy that they didn't do anything or make any sort of overtures to help their customers who lost food and medicine, especially in this time of the COVID crisis, where many people are strapped for cash, and having to absorb hundreds of dollars of food loss or medicine loss is extremely difficult for those people. So the legislature is looking into perhaps passing laws that require companies to pay some sort of compensation to their customers if the power outages exceed a certain number of days.
And do we know if general liability coverage would be available for that if that legislative act does pass?
I don't know for certain, but it'd definitely be worth looking into your existing programs to see what you have for any sort of liability coverage related to disruptions. And then, I would imagine that it's perhaps something that you could go to market to see if there's any particular product that's out there that would specifically address these types of risks.
Now, P&E companies may be required to pay cleanup costs if hurricane leads to the release of potentially harmful materials. Are there cleanup costs covered under property damage in these policies?
In some instances, they may be covered, especially if the P&E company is required by some government authority to clean up the cost, bear the burden of the cleanup costs. One example, as a result of Hurricane Katrina, there was an oil and gas facility that had a release of crude oil, and it affected the surrounding land, canals, and marshes, and they were ordered by the U.S. Coast Guard to clean the affected sites. So they sought coverage under their property policy, which was initially denied by the carrier, but a federal court out of the Northern District of Texas said that those costs were covered because they were sums that the company was legally obligated to pay as damages to cover property damage.
Yeah, and if I could just amplify on that, I think, the thrust of the issue there is liabilities policies contain that language. We will not we will indemnify you for damages that you are legally obligated to pay. And so when when a lawsuit is filed and there's a judgment against you, it's clear there's a legal obligation to pay. Short of that, when the government comes in and sends your company a nasty letter that says, we have this dam, this oil spill or some sort of pollutant, and we think you're at fault, clean it up or else we're going to come after you or levy heavy fines. And the company responds to that demand. The question is whether or not that letter that you get from the government, sometimes it's called a PRP letter or potentially responsible party letter, and you act upon that before any sort of official suit is brought against you. Does that create a legal obligation to pay? And I think what Kerianne was saying is that this Texas court decided that it was. And there is a little bit of divergence in the courts, I think, in terms of what type of letter exactly constitutes or creates a legal obligation to pay. If it's very, softly written or a pretty please, then maybe it will not be. If it's more forceful and it's, there's government authority standing behind it and potentials of levies and fines, it's more likely to be something that will be considered a type of demand that creates a legal obligation.
Now, Dave, I think you touched on this earlier. There's a growing concern over the speed and effectiveness of P&E companies' post-storm restoration efforts, right? Getting the power back on, getting things up and running for folks. Now, it's my understanding that some commissions have been established across the nation to sort of investigate and issue subpoenas in this regard, and that can be rather costly for the P&E company that's the subject of those inquiries. Can you share a little bit on that and what those investigations are like, and if there's any coverage for those costs?
Sure. Again, as I think one of the first things we said in the beginning of this webinar was that we become very heavily dependent on energy, and so when energy supplies are cut off, or people without power, they can't get access to fuel and things of that nature. Obviously, it raises all kinds of alarms with the legislature because these companies, most of them are for-profit agencies, some are not, but most of them are. But there is this sort of connected relationship a lot of times between the energy suppliers and distributors and state governments. They're very heavily regulated industries. There's certain concessions they get, and there's almost like this quid pro quo that's created, and it's sort of a public need for having energy available, at all times. And so when there is disruptions and, the amount of time that it's taking the energy, suppliers or distributors to get things back up and running, if it becomes, an expansive amount of time, you have a lot of upset people. State governors are very unhappy. The legislatures are unhappy. So if in those events, it may spurn some sort of investigations as to why is this taking so long. For example, going back to Connecticut, our home state, there was many years ago, probably a decade ago, so there was a couple of storms, one of which was Irene, that created widespread power outages. And so the energy company indicated that, well, we're in a heavily wooded area. We have all these trees here that are by our power lines. We need to do something about that. We need to increase our rates so that we can invest the money into, better infrastructure and to clearing trees by these power lines. So that was approved. The rates went up. Clearing companies were retained to remove trees around the area. And then 10 years or so later, with Isaias coming by, again, we had widespread outages, and the response time and getting things back up and running again didn't seem to be much better, or about the same as it was before. The money was invested and the rates went up to do the things that the energy company said were needed to prevent this from happening in the future. So that spurned a special session in the legislature, and investigations and perhaps passing of statutes to hold energy companies accountable, or have some sort of compensation based upon performance. And with that, there's, as you said, the potential that investigations need to be done. Files need to be looked at. What exactly did you guys do in the 10 years to mitigate these sorts of risks? And obviously, as you touched upon, that can be very, very expensive to comply with all these demands concerning, papers that are 10 or more years old, going back into your computer systems, things of that nature. So there is some coverage that may sometimes be helpful for those types of costs that are unexpected and incurred. For example, a directors and officers policy may cover that type of risk. There are certain standalone policies, I think, investigative cost compliance coverages that are out there. But you have to kind of scrutinize for what type of product you have to see if it would fit those types of costs. D&O policies, for example, some of which may have endorsements that cover those types of costs, but they may be confined to the type of legislative agency that's investigating you. I've seen them where they're confined to investigations by the FTC or the Department of Justice or other entities. So obviously that wouldn't do you much good if an energy commission is the one that's out there subpoenaing you for your records.
Now, and thank you for that. That's very helpful to understand, because I don't think people totally understand the process that goes into the recovery efforts and what the legislature is doing to try to make that more expeditious, and how that, of course, creates risk for the P&E companies themselves. Now, with storms increasing in frequency and severity, as we've seen in this hurricane season alone, what suggestions do you have for companies in the power and energy industry in terms of risk management strategies?
So in addition to traditional insurance, which can become cost prohibitive given the increasingly tough market that we're seeing based on how carriers are calculating these premiums, there's a trend towards utilities companies turning to other risk management methods, such as catastrophic bonds, weather derivative bonds, or even self-insurance.
And there may be some legislative collaboration that can occur as well. Again, state governments and energy companies are, kind of heavily invested in each other. So there may be some sort of relief that these companies can get in terms of legislative funds, or, security funds or things of that nature that may be put in place in the event of natural disasters such as hurricanes.
Okay, thank you. As we're wrapping things up here, Dave, I'm just wondering if you could maybe give us a few key takeaways that you would want the folks in the power and energy industry to know or do about their insurance coverage going forward in this hurricane season and those to come.
Well, I think the most important thing is now's the time to review your programs, your existing programs, to see what you have. Do you have business interruption coverage on your programs? Is it confined to any sort of limitations in terms of the types of economic remedies that are provided thereunder? If you're a distributor and you rely on a supply chain, do you have contingent business interruption? And if you do, is it confined in any way to specific types of suppliers? Is it only the direct supplier you deal with? Is it an entity further downstream also picked up under that product? other programs to look at. Again, as we mentioned, your directors and officers policies, if you anticipate that, disasters could lead to issues with getting things back up and running, which may spurn some sort of legislative investigations. So that's another area to look at. And then, obviously it's a cost benefit analysis. So you'd have to, what are the costs of getting this type of insurance, put in place? What are my options? And what is my risk of damages should one of these storms hit, one of my facilities?
Well, thank you both for your time today. I really enjoyed doing this program with you. I think it was very informative. For the folks that are watching, we're just going to put up our contact information here. If you have any questions or inquiries or related to this presentation or anything insurance coverage related for policyholders, please feel free to contact us. Also, please remember to go to our website, www.sdvlaw.com, for further information, further webinars on this hurricane series and other webinars regarding policyholder coverage issues and lots of other content. Thank you very much for joining us.
Thank you.
Thank you.